So this is how to get or into the illustration software. I kind of show you, kind of backtrack a little bit. So as soon as you guys, kind of get contracted licensing with Ameritas, you'll get your agent number and have access to what we call producer workbench. This is what, maybe some insurance carriers kind of call your dashboard or just like your home page. But really here is kind of like your go-to for anything that you need, right? So in the day-to-day tasks, you'll see there it's kind of broken down: sale, manage, service, payments. Here's where you can do anything from, go directly to the e-apply, obviously create an illustration, which I'll show you here in a little bit, manage anything that you may need. This alert center, if you had any, emails in regards to any cases that you had, that'll show up here as far as unread messages. This could be, stuff directly from the underwriter, asking you for additional requirements or information. It could be the policy itself for policy delivery. You can do the same thing here as far as, look at any new business that's pending, anything that's been issued and not paid. So a good kind of section to kind of pay attention to as you're doing business with us. A couple things here too before we jump into the illustration software. Here you'll see attend an event. So this will highlight anything as far as additional trainings or any events or anything going on. The DI team specifically, we do what we call connect sessions. Typically these are, a couple times a month, and it could be anything from, product specific information. It could be system training. It could be, anything, illustration, those kind of different things, right? So those will be here. They're free to attend. It's just a webinar. If you can't make it, always just register to be there, because even if you can't make it, you'll get a recording sent afterwards. So that way you have that to view afterwards. Latest news. This is more so if there's any like product and service announcements, if there's any like newsletters or anything like that, that'll be here. Again, the DI team specifically does what we call dialogue. It's a monthly kind of DI newsletter that just kind of hits on anything DI related. So if there's any news happening or anything we like to highlight as far as a product or anything goes, that'll be there as well too. So we'll jump into illustration here. So just go to create an illustration. Again, we're looking at disability, so you're going to go here to Illustration Pro for DI insurance and just click launch. And then here's where you'll type in your agent number. I'll type in my own.
Tanner, really quickly,
Mm-hmm.
I know you showed us how to get there through the old dashboard, but we're soon to be going through the new dashboard. Is there going to be a different way to get there through the new dashboard?
No, it's going to be the exact same. So the difference between the dashboards is more so for doing business. So the new dashboard's more kind of interactive. It has the ability for you to kind of upload and attach documents through that dashboard itself. But Producer Workbench isn't going to change. The dashboard's more so for like your pending business and things like that.
Okay,
Good,
thanks.
good, yeah, good question. So this is kind of like the home screen whenever you log into the illustration software. So what you'll see here is, any recent clients that you may have, you can filter this out all the way up to 90 days. If you do this view all, it'll bring them all up. And again, you can kind of filter or search if you're looking for somebody specific there. Same thing with the illustrations here, it kind of just does like a quick hit. You can drag this along. Again, if you want to narrow it down to just the last 7 days, all the way up to 90 days, you can do that. Same thing here, if you do the view all, it brings up all the illustrations that you've done, and you can search specific clients that way as well too. Up here, so the client section, same thing I mentioned, so it just kind of brings up your, kind of book of business for your clients right there. Illustrations, again, brings up anything that you've done illustration wise. This group tab, it's kind of confusing, so don't think of this as a like group insurance or like a GSI or anything like that. This is more so like if you're grouping people together just to kind of keep them to label them better, right? So if you're at a certain business or you met these people through an association that you're working with or anything like that, you can group them together that way. That's what that means. And then this My Desk, this just means anything that you're actively working on. So as we go through the illustration software and creating stuff, you'll see this will have a little one next to it, and that just means it's active, that I'm working on it. Any questions, I know, quickly on just kind of what this looks like, or anything kind of sticking out to you just want to know about real quickly?
No.
Okay. So creating a new illustration, I always just go to this create illustration. It pops you kind of right into the process. This create client, this will just bring up basically like a client form, right? So you type in their name, your date of birth, salary, those types of things. I don't use this one that often just because, again, I'm just going straight to the illustration. The information that you put into the illustration saves in your client tab anyways. So it's just kind of, to me, a roundabout way of doing it. That's why I just go to this create illustration. So here, two options. Um, you obviously can do a create new client, or you can do existing. So we'll do a new client here. Everybody still with me?
Yeah, we're
Yes, I'm still
Yes,
here.
yes.
Okay, okay. The view changed on me, so I was like, I didn't see you guys anymore. So okay. So we'll do New York, and obviously you can filter out all 50 states here. New York is still on our foundation product, so we'll go here. Obviously, new business illustration. If you were doing any increases or policy changes, you could illustrate that as well too to see what those changes look like. So there you see our foundation product. If we were in a different state that had Cornerstone, you'd see Cornerstone there, and foundation wouldn't be an option other than our BOE product, which we still have. So we'll do foundation. Template. So when you first log in, you'll see two options. You'll see this default template non-can and default GR. You can also create your own templates, and I'll kind of show you what that looks like. So why you would use a template, right? So let's say that you have um, a certain client base that you just like to sell to, and they have um, the same type of plan design, or this is something that you always kind of is your go-to as far as the riders and benefits that you add. You can create a template and save it, so that way whenever you go back in, you just create or select that template, and everything's already pre-populated and filled out for you. So that way you don't have to go back in each time and do these clicks and drop downs and things like that. So here's the illustration software itself. As you see here, there's a client name and information. If you needed to change anything, you can click on that. It's gonna scream at me. Give me 1 second here. So you can click on the name and make any changes. So, if you had the name misspelled or you didn't really have the birth date, you just kind of put in an age, you can change that there as well too. The one thing that you can't change is the actual state that we're running it in. So you see that it's in New York. If you needed to run a different state, you'd have to basically back out and start a new illustration, because it's specific. Everything right now is specific to New York as far as the rates and things like that. Agent. So again, this will be specific to you, your own login, so it'll have your information listed there. But let's say if you were running an illustration for another agent or something along those lines, you can go in here and do a drop down and do existing or new. If they were already in your system, you would just do existing and they would have a list of all the agents that you already had in there. But if it's a brand new one, we call this secondary agent, you would put that in there.
For illustration purposes, is the secondary agent necessary? Like if we're splitting a case, do we have to have the other agent on the illustration?
No. And this, so basically the secondary agent only really comes into play if you were running for somebody else, if that makes sense. So in my role, right, I run for multiple agents, different names, different information. So anytime that I do that, I go in here, click agent, and then I'll do it under their name. So that's kind of what secondary agent means. It doesn't necessarily mean that, hey, I'm splitting this case, I'm going to put um, agent XYZ on it as well too. It you don't need to do that. It'll be just specific to yourself, if that makes sense.
Thank you.
Yep, absolutely. Um, so as you see your product type again, foundation, if you wanted to run something different, you could select that there and do a different product type. But again, it would still be in the state of New York. These after issue options, if you were doing like a policy increase or anything like that, that's where that box or that option comes into play. Tobacco status, obviously, non-tobacco or tobacco rates. Premium paid by individual or if they were doing employer. Typically, I don't mess with that. It's always individual paying the premium. Occupation here, so non-medical. This is broken down into obviously non-medical, medical, if they were a realtor, and then general dentist as well too. So let's do non-medical. You can click on that guide here and it brings up our whole occupation guide. And again, if you just wanted to search here and it brings you there. So it'll take you something that's, very generic like that. It'll take you and highlight everything that has sales in it. But if it was more kind of narrowed focused, it will take you right to where that is. So we'll just kind of just pick an OC just to show you. So 6A. On our foundation product, we do have what's called a preferred occupation discount. So this is for any occupations 6A, 5A, 4A. Again, must use the Easy App process. So basically that's e-apply, but the Easy App process is tele underwriting. So want to make, whenever you go through that process of doing an e-apply, you want to make sure that you select that tele underwriting interview to make it an easy app. And then we also do it for 6M, but it's a certain occupations within 6M, and those are listed there as well too. So not every 6M occupation has the ability to get this preferred OC discount.
Hey, Tan, I have a question.
Uh-huh.
It said that the 90 days waiting period, is there a lesser waiting period or is that standard?
That's pretty standard. There can be lesser ones, but typically with IDI, 90 days is about the standard ones. If you get into like the BOE and things like that, you
I
can
see.
change it. So as I change the benefit period, different things are opened up. As far as elimination period, that's a 2 to 5 years, and then anything 10 and up is going to have that 90
Okay.
is your lowest. Yeah.
Okay.
Do we
Thank
have
you.
a product like a short-term disability that offers like a 7-day elimination period or anything, or is that kind of we got to go to Aflac?
Yeah, you have to go other routes. We don't have any short-term, disability products.
Combined offers one for 3 months, Alonzo, from day one. There's no waiting period at all. We're
Thank,
they're the only one on the market that has that.
thank you.
You're welcome.
So typically, what I see oftentimes is these three options here to age 65, 67, or 70. On our foundation product, that's our highest benefit period. Our longest is to age 70. On Cornerstone, it's to age 67. So Really kind of just depends, like, again, on the conversations that you're having with your client or what their needs might be. Contract type. So right now it's non-cancelable. You can change it to guaranteed renewable. I'm not sure if you guys know this or not, but I'm just going to go ahead and talk about it. So the difference between the two are for the non-cancelable product, the rates are locked in for the life of the policy. So they won't change. Everything's going to stay the same as far as the premium goes, um, as far as the rates are. Guarantee renewable, we, the company, Ameritas, reserves the rights to change the rates if need be. But since, offering that type of product since like 1956 or something along those lines, we've never done that on an enforced block of business. And if it were ever to come to that point, the more than likely what we would do is just close out that block of business and then reopen up under a new plan type or design. The reason why I bring these up is because this is a way to save on premium. The guarantee renewable isn't as expensive as a non-cancelable product is. So again, if you have a cost-conscious client, this is one way to, again, help out with that premium bottom line. More often than not, I see non-cancelable as far as the majority of the illustrations that I've run, but I do see guarantee renewable in a lot of different situations or settings as well too.
So could we, I guess, analogize that to like a fixed or an ARM mortgage? I guess the non-cam would be a fixed and the guaranteed renewable would be like an ARM.
Um, Not really, because nothing changes with this one.
Okay.
So the premium is the same, right? So they buy the policy, it's good. The only difference is that we as the company reserve the right to change the premium or the rates, and that would be for every occupation across the board. So it wouldn't just be like, we're picking policies out of a hat. And it doesn't change per year, right? So it's going to be locked in until
Mhm.
we make that change. And Emeritus obviously would alert the clients of what would be going on, and it would be for every policy that's a 6A on the foundation product. So it
Okay.
isn't like an up and down premium
Mhm.
per year per anything like that. Yeah.
Okay.
Tanner, I have a question. More or
Yeah.
less, what's the difference? Would you say the difference in pricing where people would go to the guarantee renewable versus the non-cancelable? Is it a big difference in pricing in
It
terms of the savings, should I
it
say?
yeah, it can be, and we can compare the two just to show what the premiums look like. So I don't know if you guys saw that here. So if you go to action, you copy illustration, and what it does is opens up a new tab and it transcribes all the information from this one over to this new tab. So again, if you wanted to do multiple different illustrations to show different options or benefits or even contract type, that's what I would do, is just do that copy feature. So that way now you have them both saved in your illustrations. You can print them both off.
Okay.
But I'll show you,
Yeah, that's fine.
yeah, what they look like.
And you do have to disclose to the customer the difference between the contracts, right?
Correct. Yeah.
That
Yeah.
would be the right thing to do.
Yeah. Yeah. And oftentimes, sometimes that's for lack of a better term, the selling point, or the sticking point for a lot of clients, is that they just feel more comfortable knowing that the non-cancelable,
Right.
it's like, all right, nothing can change.
Mhm.
But again, with the guarantee renewable, that's never happened since offering that. And it's highly, highly unlikely that that would ever change. But again, ease of mind, a lot of clients go with that more so than premium sometimes.
Okay.
Definition of disability. So this one says, you can choose up to 3 that are available. So really, you can choose 2, and it will show you those 2 on the illustration. Uh, you do that just to kind of, again, show options. So that way you're not going back and having to run multiple different iterations of the illustration itself. The difference, again, between these two and even the third one is just kind of the contractual language. So the first one is the better or the best option of the 3 in regards to the definition of disability. What this says is that the insured is unable to do their own occupation for the length of the benefit period, but they would still be able to be employed in another capacity. So let's say, for instance, this individual 6A could be, a high earning executive. Something were to happen, they get in an accident, have a disabling event, or have a sickness, or they're no longer able to do their job, but they're able to do something else, right? So they're no longer able to do their executive role, but they could file paperwork or answer the phone call or something along those lines, right? They would still be able to get claim payments through their policy, as well as collect a paycheck doing something outside of what their occupation was, and it wouldn't hinder either or, right? So their paycheck that they're getting wouldn't decrease their benefit that they would be getting from this policy. These next two, similar in regards to their own occupation, but as you see here, there's more to it. So they're unable to do their own occupation, and they're not working in any capacity at all for the length of the benefit period. That's what this one means. And then the third one is it has a 5-year ONOC. So for the first 5 years, it follows this one. So they're unable to do their own occupation, but they're able to be employed in another capacity for the first 5 years. After that 5-year time frame, they wouldn't be able to be working at all for the remainder of the benefit period. This one is a little bit more restrictive in regards to the language of it. Oftentimes, it's in there if they have some kind of training or the ability to work in any capacity or occupation at all based on their training or their knowledge or anything like that. They would be required to do so with this one. This one isn't as expensive as these other two. The cost kind of goes in order here. And the reason why that is because, again, after that first 5 years, this is more restrictive in regards to what they're able to do, if that makes sense. More often than not, the top one, this ONOC for the length of the benefit period, is the one that I see and illustrate for the agents that I work with. If we come down here, so illustration details.
Quick, Tanner, with
Yep.
the definition, is it a substantial cost difference, or is it like, are we talking, 20% difference, or are we talking like 5% difference in price?
It can be a pretty big difference, yeah.
Okay.
So I'll show you same thing just to kind of show you options, what that looks like. So for this one, always important to, if you know what they make, it allows obviously the illustration to kind of speak to what the underwriting guidelines are, what they would be able to qualify for. So let's go in here and just put in a number. If they had any other earned income, so if they did any bonuses or anything like that, you'd put that there. If they were a business owner, they could qualify for this business owner income enhancer. Basically what this does, it increases their income by an additional 20% just to help, business owners cover the cost of any or loss of any company perks or anything like that. So kind of calculating the fact that they are a business owner, there's other things that go into that. It kind of gives them a little bit more of a bump in regards to what their earnings are. What you want to do now is go to this calculate limits. If they had any other in-force, either individual coverage or group coverage, you want to make sure that's reflective here because, again, that'll go into the calculation of what their monthly benefit or what they qualify for. Again, there's that business income enhancer. There's a couple riders here that you could add to the calculate feature. Catastrophic. So this one it pays an additional monthly benefit on top of what they would be getting from their base benefit if the insured was unable to perform 2 of the 6 activities of daily living. And that's like dressing, eating, competence, future increase option. So this allows the insured to increase their monthly benefit as long as they financially qualify for it for the length of the policy. So this one, think of this one as like basically a pool of money that they can tap into. So as they continue to grow their career, potentially obviously earn more money, they have the ability to protect that income. Automatic increase rider, what this does for the first 5 years of the policy, it automatically increases that base monthly benefit by 4%. Again, this is automatic, so they don't need to send in any financials or do any additional underwriting, and automatically does it. The client can refuse an increase, but once they do that, it wipes everything out. It takes the rider away. So let's say in year 2, the client reaches out and says, "Hey, I no longer want the automatic increase. Please remove it from my policy," or I decline the option. It wouldn't obviously do that increase, and then years 3 to 5, it would no longer again be on the policy, so that it would no longer increase. So I do this calculate maximum benefits. So as you see here, based on their income, they would qualify for this 5,300 in base benefit. The FIO would be 15,900. It cannot be more than 3 times the base or up to our max issue and participation limits, which for occupation class 6A is 30,000. So that's where you see, or why you saw that amount there. So then you just set benefits, so that locks that in, and you click OK, and you see everything there. Premium mode, annual, semi-annual, quarterly, monthly, all available there. Premium option, we used to have the ability to do like a rated premium. So, it starts off low, and then as the years go on, the premium slowly increases. We've gotten away from that, so now the premium options just level across the board. Your discounts here, so multi-life. So if you had 3 or more lives at the same employer, you'd be able to get a 15% discount there. 20% is only for like employer paid, or if they were a resident or medical intern, it's 20%. Association discount, this is 15%. So this is, if they're a part of an association like the American Bar Association, those types of organizations, they would be able to get that discount. Big case discount, this is something that we no longer offer. It's just still in the illustration software there. This was more so of if you had kind of bigger cases where altogether the premiums equaled over $1 million. That was an option, but again, we're going away from that. Any questions on, excuse me, the kind of the calculate limits portion of it, or even the discount section of this?
The multi-life, can you go over that one more time, please?
Yeah, so as long as you have 3 or more lives at the same employer, they would be able to get what we call multi-life, and that is 15%. Now with this as well too, let's say you had a client that you're working with that is employed at kind of like a bigger location or a bigger name hospital or any employer, anything like that. You can reach out to me and I can look in our systems to see if we already have something established. Oftentimes we do, and if that's the case, then you can use that multi-life discount because it isn't, some of them aren't tied to specific to agents only, if that makes sense. Same thing with association. So if you have somebody that's involved or linked up to an association, you can reach out to see if we have that in our system already established for the discount. If you have one that you're working with that isn't in our system, you can always go through setting up for either or, for the association or even the multi-life as well.
So with the multi-life, Tanner, I'm just trying to understand. So would that need to be paid for by the employer in order for them?
No.
Okay, still
Yeah.
be individual.
Right.
Thank you.
Yeah,
Do we
good
get to
question.
see what the monthly premium is gonna be? Or is that the next?
Yeah. So you can always do that in this quick calc, so you can kind of see it there.
Okay.
Again, so we're talking about the differences in definitions of disability. So as you see there, not a huge discrepancy.
About 10%.
Yeah. And again, to me, you know, depending on how you're working with your client, obviously the ONOC, the first option here that we talked about, is definitely has a lot of value to it. So, you know, portraying that to them and letting them know exactly what they're paying for really kind of bridges the gap, in my opinion, as far as the cost difference there. So go to the rider section here. So here's kind of a whole list of all the riders that are available. So the residuals, so these basically are just mean, or what these are. Again, it pays an additional kind of benefit on top of the base benefit if the client was unable to go to work full time. So, if they're fully disabled, obviously they have the base monthly benefit. If they are unable to work, 40 hours, if they have a loss of earnings, 15% or more, these residuals would kick in. So again, not totally disabled enough to get the monthly benefit, the base benefit, but enough that they're obviously feeling an impact on their salary or their income. These residuals would come into play there. I would say 98% of the time, I have a residual on the illustrations that I do. Again, just because it covers the client in any kind of situation. Cost of living adjustments. So these are based on the CPIU. It is an adjustment. It kicks in obviously 12 months after the policy, as in regards to the payout goes. You have the 6% compound. So again, it's just a 6%, maximum of 6% compounded annually. Again, it's just based on the CPIU, Consumer Price Index. And then the 3% simple. It's just a simple increase of that 3%. Again, monthly benefit beginning 12 months after the date of disability. The SIS rider, so the Social Insurance Substitute, excuse me. Again, this just pays a monthly benefit. It does get reduced or impacted if there's any governmental support like social insurance or anything being paid. Workers' comp was another one that goes into that. And it's just offset by what they're getting paid through those different programs. This is another way to help save on the bottom line as far as the premium goes. So you'd be able to, what you do is split between the base and the SIS. So instead of getting $10,000 in all base benefit, you would do 5,000 in base and 5,000 in SIS. And again, that would save on the overall cost of the policy. Future increase option we kind of touched on before, automatic increase as well too, and then the CAT rider there as well. Any questions before I jump into the report section of this?
Yes. Can
Yeah.
you go through the SIS again? So the total benefit you said was 10,000. You can split it, 5 and 5,
Mm-hmm.
right? But what if the social well, first of all, that's if they qualify, right? They would have to actually receive it.
Correct. Yeah. So that the only way that it would be impacted is if they're actually getting a payment from one of the from social insurance. Yeah.
Because I have a friend, she's been getting rejected from it at least 2 years now.
Mm-hmm.
Got a lawyer, still getting rejected. So in that situation, they would pay the 10,000.
Yep.
The full 10,000.
Mm-hmm.
And what happens if you qualify for it and say the benefit's only 1,000 from 1,200 from Social Security?
Yeah. So in that regards, the base would pay the 5,000. The SIS would pay 4,000. So in totality, they would still be getting the same amount of coverage through this, their Ameritas policy, as well as what they were getting from the governmental aid or whatever.
So
So
they'll still be getting the 10,000 regardless.
Right. Yep.
yeah. So Tanner, I have a question. So that's a rider, correct?
Correct. Mm-hmm.
So is this something that you would, without the rider, with this rider, if they were getting Social Security or workers' comp, does that mean that our benefit, let's say it was 10,000 and we were getting 4,000 from workers' comp, and they didn't have this rider, Does that mean that Ameritas would only pay them the difference, the $6,000 difference, or
Mm-mm.
what's the guarantee there if you don't have this rider?
Yeah, I mean, the guarantee is that it would be a full payout from the base policy or the base benefit. Yep. So the only caveat obviously would be like if they had some kind of group insurance or other disability specific insurance in play. And oftentimes, hopefully, through having those conversations with your clients, that's already made aware. And in that first section, in that calculate limits, we already would have taken that into account as well. And again, that's something that would come through the underwriting process as well, looking at to see if they had any other in-force DI coverage. But if they didn't have the SIS, then yeah, that wouldn't impact their base benefit that they would be getting through their Ameritas policy.
So they would
And
still get the same amount despite of the fact
Right.
that they're getting social services. So what's the point of getting that social insurance substitute? Is it because they would have another disability plan? That's where the benefit comes from this rider? I'm kind of not
Yeah,
understanding.
no, that's a good question. So for some occupations, so our lower kind of classes, like your 2As, your As, your Bs, this is required. So it's automatically on the policy no matter what. If we're looking at a 6A here, so the question is why would they go into this? Really, the biggest thing is the cost saving aspect to it. So
Oh,
again,
okay.
and yeah, so instead of paying for the premiums associated for a $10,000 base benefit, they're now only paying for 5,000, but still getting the $10,000 in
Right.
coverage
Now I
because
get
they
it.
because they split between the two. Yep.
Got it. Got it. So I
so
got it.
with that, theoretically, with that and the non-tobacco and the multi-life discount, we're talking quite a bit.
Yeah, it could be. I mean, again, so that's one of the things, if you have a cost conscious client, there's a lot of different ways that we can um, look at different riders and different combinations of things to really kind of save on that bottom line, but still provide them the coverage that they need in regards to, that asset protection. So, um, a couple different ways, as I'm, trying to talk about with either splitting it with this one, change it to a guarantee renewable, looking at those discounts if they're available, those kind of different things. So yeah, there's different ways that you can kind of stack up on some of these benefits to really ensure that that premium is kind of where they need it or what they want it to be.
If you don't mind, when you run the illustrations, can you show us an illustration with and without it? That's this rider,
This, yeah,
if you don't mind.
absolutely,
Okay,
yeah.
thank you.
What I'll do here, give me 1 second. Let me mirror this so we can kind of see the difference between the GR and the non-can. And then I'll go back and show you with the Sys Rider too. Okay. And then the report section. So this is where you can actually build the pages in the illustration itself. I usually just add all pages over there. But again, you can kind of pick and choose which ones you want. They'll show over here in regards to the page order, and you can kind of drag and drop however you want them kind of ordered. Oftentimes, I do like this YDI after the cover page because it does kind of circle back as to the importance of having this type of coverage for the client. And then what you want to do here is go to the action and then do preview illustration. And that'll bring up the illustration itself. So this is kind of the cover page, again, presented by, so this is where that secondary agent came into play. This is obviously the client name. Here's the YDI page that I talked about. And then the actual illustration itself too. So this is with the first definition there, the ONOC. Breaks down, obviously what the benefit is, what the monthly premium is associated with it. Here, this piece of it is saying that, okay, so this is what you'd be getting for a full year in regards to the benefit. And then if something were to happen for the length of the benefit period, here's what it would pay out totality.
Mm.
So if they got it, disabled or something happened today, up to age 65, that would be 17 years. That would be the coverage they would be getting for that whole time frame.
And Tanner, when they put in the claim that the premium stops,
Yeah, correct. Like waiver of premium. Yep. Hmm.
For how long? For the duration of the disability, or how does that?
Yep,
Okay.
correct.
So if this person, let's say, potentially ever goes back to work, they're not going to ever have to pay premium.
Right. Hmm.
Wow. That's
so
cool.
for example, Tanner, Charles gets this policy today. Next month, he only pays one premium, 184. Next month he gets injured and is out for 17 years. There's no premium, and we're gonna pay him basically $1 million.
Yep.
Okay, thank you.
That's
Hmm.
the risk they're taking.
Yep. Right. Yep.
Pretty
and
generous, right?
right.
Alonzo, don't
Yeah.
get any funny ideas,
There's
okay?
Oh,
yeah.
my
Tanner,
bad.
Tanner. So this
Yes.
is
Hmm.
my question. Hi,
Yeah,
this is
Alonzo
Alana.
trying to understand how to pitch it. He ain't worrying about that.
Oh my goodness. This is what I wanted to
Mhm.
know, Tanner. Okay, so say the person gets disabled and they're getting paid out, and then they go back to work, they're fine, and then they get re-injured in a different way. Do they still qualify for a payment?
Yeah, correct. Yeah, they would. So
Awesome.
yeah, and that's where, again, this enhanced residual comes into play again. So on both sides of that, right? On the front side, they get injured, and it's just human nature to try to push through the injury, and like, we have to go to work, we have to do this. So that's where the residual comes into play, and I think why it's so important to have it on there, because as they're kind of dealing with whatever injury they may have or sickness they may have, this still ensures that they're kind of having some protection in place for that loss of salary because of reduction in hours or reduction in duties, which then impacts their salary. And then on the flip side, so they're coming out of it, right? They're coming out of a disabling event or sickness, and they're kind of getting back into the workforce. Again, residual disability that could kick into play there as well. So they're not totally disabled, they're still working but not full time. They have this to help, again, kind of bridge the gap between what may be being lost.
Wait, I just looked at the premium. So for $3,300 a year, I can guarantee that basically if I get injured, I'm gonna get $5,300 a month. Obviously, in this scenario.
Yes. Hmm.
Why aren't we selling more disability, guys? Holy
I,
smokes.
Yeah, you guys tell me, right? No, I think, that's a great question. And I think the biggest thing is that it's kind of, for a lack of a good analogy, it's the monster in the closet, right? There's a lot of different writers, there's a lot of different meanings and words and sayings and things that, you know, it doesn't really make a lot of sense if you're kind of just looking at it for the first time. So, even approaching that conversation with clients, a lot of people don't do if they're first time agents or kind of new to DI, because there are a lot of just like random situations and scenarios, and again, riders and different things like that. So, just having the conversation, I think a lot of agents or financial professionals shy away from it just because of that. Which really, if really kind of think about it, this provides them the most well-rounded financial protection, right? So if you're talking to them about their life investment or their life insurance or things like that, right? They're protecting them what happens if they die. Disability is protecting them now, right? It's protecting their biggest asset, which is their income. How are you protecting your paycheck? If something were to happen, what happens to your home, what happens to your car, what happens to your family, how are you taking care of them or protecting them, right? Because your savings can only go so far. But yeah, I mean, I think that's oftentimes with the conversations that I have, it just never comes up. Nobody ever talks about it because they're not sure how to approach the topic or the subject with their clients.
Thank you. And then one more question. It kind of piggybacks off of Alana. So I understand with the enhanced residual. So, Charles gets injured, 6 months, he comes back. How soon until he's able to, let's say it's a different injury, how soon until he's able to recoup benefits again?
Through the enhanced residual.
So it would be a different, let's say, the first injury he injures his knee. And then the second injury, it's an elbow. So it's a different injury, but at a different point in time.
Got you. Okay. I mean, as long as it's, an event that they're having. So if you're looking at just the base itself, it would have to be that elimination period of 90 days. For the enhanced residual, let me just double check here.
I'm saying so. Okay, I'm not going to say Charles because I don't want to put that out in the atmosphere. But say Gus. Say Gus hurts himself. He's a painter, and he, hurts himself. And then he gets together and everything, and then he goes back and he's on a ladder trying to paint the second story, and he falls and he breaks his leg.
Mm-hmm.
First it was his elbow, now it's his leg.
Yeah, so with the base benefit, I guess he'd still have to pay that 90-day elimination period. But for example, if he just gets back to work, let's say he was out of work 6 months, he comes back to work, he gets on the ladder, falls, breaks his leg. Obviously he has the other 90-day elimination, but is there like a 6-month period before he can even start to satisfy that 90? Like, does he have to be back at work for a specified period of time?
Right. Yeah. No. So it would follow the residual would follow the base elimination period as well. But as far as needing, it doesn't need to be consecutive, if that makes sense. So, let's say something were to happen, they're off work for 5 days, they come back and work another 3, and then they're off again for another 3. As long as they satisfy that elimination period, in that time frame, they can file a claim or submit a claim for that. And it doesn't have to be the same injury, right? Like you guys were saying. So like, hey, if I hurt my elbow, I'm out of work, then I came back, and then something happened to my leg now. We wouldn't say, well, no, it has to be elbow. Now that it's your knee, we have to start over, kind of thing.
Okay, that was
Yep.
my question. Thank you.
Yep. Mm-hmm. So there's the optional rider section there. You'll see here this automatic increase. There's no charge to have it on the policy. The only charge, of course, associated with it is once those increases do happen to the base benefit. And I'll show you that here in a second. And it breaks down obviously the different premium modes and kind of tells you exactly what, 3.1% of your monthly income to protect, all the way up to 5,300. Automatic increase. So this kind of shows you again the breakdown of the first 5 years, what that looks like. So after year 5, you're looking at a base benefit of 6,400, and there's a premium associated with it as it goes up.
That actually answered my question. I was going to say, why would someone decline the increase? But there is a premium increase with the automatic increase. Okay.
Correct. Yeah. So as it's increasing your base benefit, the premium associated with that does increase as well too. But having the rider itself on there, there's no cost other than obviously as it increases there. And then it gets into the policy information. So it kind of talks about exactly a lot of those things that were up there, non-can, guarantee policy type, base monthly benefit, the ONOC. Base policy features here. So non-disabling injury benefit, this is free to have on the policy. Basically what this is saying is that if you suffer an injury that requires medical treatment or repair to your natural teeth prescribed by a dentist, we'll pay to help with the offset of that treatment. It won't exceed the lesser of either 50% of the base or up to $3,000. Again, that's part of the base policy there. Cobra premium benefit. This is saying if you become disabled and due to that you lose your job or become unemployed and you're paying into Cobra medical coverage, we'll help reimburse for those premiums, either individual or family plan, up to $1,000 a month, beginning with the first premium due after you satisfy the elimination period on this up to 18 months. And it goes into talking about the riders here as well too.
Can you cover the survivor benefit?
Yes, so this one's just basically saying that, you know, if you were to die after satisfying the elimination period, and while monthly disability benefits are being paid under the policy, we'll pay an additional 3 months of that base benefit to your designated beneficiary. And if there's none stated, it will just go to the estate.
So can you break that down for me? So if a client is, so Gus is injured, he broke his leg, whatever, you know, 6 months into it, he dies from gangrene. You'll pay his wife 3 months of the benefit.
Correct. Yep.
Okay, thank you.
Tanner, I have a question. Are they going to tax that money that they give to the spouse or the beneficiary?
That's a good question. I'm not sure on that one. I can double check with you. Initial thoughts with that is no. I mean, it would be the same as they're paying to the insured, but I'll double check and circle back with you on that one.
Good question, Lon.
Thank you. Thank you, Tanner.
Yeah. Then breaks down the riders here as well that are, you know, specific to the illustration here.
Excuse me, Tanner, I have one more question.
Yeah.
Approximately how long would they pay out? Because if the spouse passed away, this would be, you know, another form of, you know, helping take care of all of the situations that come along with, you know, your spouse passing or your benefit, you know, your spouse passing away. About how long do they take to pay out?
Like as far as if the insured were to pass away, how long does it take to get that survivor benefit?
Yes.
I'll have to double check on that one for you.
Okay, so it's not like an automatic just roll from one account to the next. They have to, well, obviously, Alani, the client would have to put in information, hey, you know, John died, this, that, and the third. So
Right.
it take a little bit of time.
Yeah.
I was just thinking along the lines of, you know, if you have to use that money for the burial, for the funeral and everything, trying to let these entities know that money is coming. You know, a lot of times they want policy information and all of that stuff. I was just trying to figure out like how that would work. Because, you know, it's time sensitive a lot of the time.
Right. Yeah. And we definitely take that into account as well too. You know, this isn't something that we're going to make, you know, a lot of people jump through hoops and, you know, obviously it's a sensitive time and sensitive manner, but I don't know off the top of my head as far as the specifics to that. So I'll double check with and kind of circle back.
Thank you.
Yeah, absolutely. You'll see here premium alternatives. So this kind of breaks down, you know, if you were to choose different elimination period and benefit periods, what that would look like as far as the premium goes. And then same thing here as you're looking at the different definitions of disability. And then it just talks about underwriting requirements. So what, you know, kind of just setting expectations with your client as far as what's next if they do apply, what we would need as far as medical requirements, financial documentation. Same thing there, just copied twice because we looked at two different definitions of disability. And then the liability release, just as just something to have just to kind of cover your own behinds of saying that, you know, I spoke to my client about this type of coverage. They, you know, were aware of it or, you know, declined it, this and that. So if anything were to happen, you know, you'd have this to kind of for your records. And then I'll flip over real quick. So just to grab this. So 289.66, you know, was the premium here for the non-can, the ONOC. If we go to this version, this is going to be the guarantee renewable. me switch that to monthly.
And can you show that one with the sis if you don't mind?
Yeah. So I'll show you this one and then I'll add this. So 235. So 289 to 235. What's the difference there?
It was about 15% difference. Because you're getting the same benefit.
Now keep in mind now, so we added this one, split between the two. The FIO decreased because again, we can only do 3 times the base. So just want to make sure to keep in mind with that. So this one's obviously going to be, the premium is going to be a lot lower because of that.
So this is
184.
social SSDI or SSI.
What's that? I'm sorry.
So with the system, we're assuming that they're getting that they would do this disability but pay a lower rate because they'd likely go for SSI or SSDI.
Right.
Okay.
Yeah. That means that whatever job they're in, they're offering workers' comp or disability benefits. So usually self-employed people don't have that. So they would want to be covered for that. But people that already have it through their work don't necessarily need it, and that's the premium savings. Correct, Tanner?
Correct.
So
I thought it covers Social Security as well.
Yeah, that's why I was like SSDI or SSI. If it's through your employer,
I
then
mean, workers' comp is part of that, but in addition.
Thank you.
Well, that's all I had for today. I know I had some takeaway questions I'll circle back with you guys on, but any questions for me before we kind of get off here?
Really quickly. So the employer paid, does that look any different or is it pretty much the same process?
It's the same process as far as building the illustration itself.
Except the
You'll
benefits
see,
will be the benefits will be
right.
taxable amounts.
Exactly, yeah.
The employer pays.
Yep. And that's another thing too. I mean, kind of going back to your comment of, why aren't we selling more of this? That's another thing too. I think a lot of people get whenever they talk about disability insurance is that you'll have clients say, well, I get that through my work, which is totally fine. But the benefit that they're getting through their employer isn't
Very
exactly what
limited.
they're getting. Yeah, because again, it's going to be taxed. So they may say like, yeah, I got $10,000, but once that 10,000 is taxed, it drastically changes. So their coverage really isn't exactly what they're getting. So, have those conversations with your clients, and even if you want to send information my way as far as if they have group LTD coverage in place and you want me to take a look at it and kind of just let you know what the rundown is, I'd be more than happy to do that as well too. Oftentimes too, that group coverage isn't tailored to their needs. It's just kind of like a blanketed
General.
approach. Yeah. So having some of these different things like we talked about, the residual, the FIO, those different things, they're not on there because again, it's just a cut and dry. Here you go kind of coverage.
And I would think 9 times out of 10, most people don't even know what those coverages are for or how they just pay for it. And unless they buy long term, they're not covered on a long term basis.
Yep.
So a lot of them don't even understand what they have. They think they have, but they technically don't. And what they do have is probably state and New York State is only paying for disability, I think a little bit over $930. And who can live on $930 in New York State?
Who can live on $930 in America?
And anywhere, exactly. So, but that's what they get paid. If somebody's disabled, that's the pay. That's what they get paid. They don't know that they're not covered. That's why these are good conversations to have, because the way I pitch it is people insure their cars, they insure their homes, but have you ever thought of insuring your money? And they look at you really weird. Yeah, nobody insures their income. This is a way to protect your money. What makes you live every day? What pays your rent? What pays your bills? So that's how I
Call it
pitch it.
paycheck insurance.
Yeah. Paycheck insurance, correct. And people don't think about it because they really, really don't. They don't until something happens and they figure out how badly insured they are. So
Yep, absolutely. And I'll show you this little graphic too, if I can find it. Yeah. So we call these like the blocks, right?
mhm.
So as you see here, you know, your income is your base. So imagine taking that whole row out and look at all the things that are going to tumble down, right? Because of that. Like you were just saying, your home, your auto, all the different stuff, right? All the things that your paycheck provides to you, and you rely on that income, that paycheck. This is a way to protect your biggest asset, which is that income, which allows you to then protect all those other things as well.
Wow.
Yep. Good
That's your
stuff.
whole sales presentation, that one page,
I was
basically.
about to say.
Yeah,
That's all
that's
you have
it.
to
I
say. Yep.
mean, you don't have to get all, confusing with all these different residual and the technical terms. And Tanner,
Right.
we thank you because you know the answer for all of this stuff.
Yeah.
I tried to. Yeah, I
You
appreciate you
know,
guys' questions because
you
I mean
know.
they're good questions, and it sounds like the wheels are turning, which is good, right? So you guys are kind of thinking about how to apply this to your practice now, and broach these conversations. So I definitely say look back at the people that you've talked to, or even maybe serviced, or ones that maybe you didn't get a chance to, and circle back with them, and talk to them about what they have in place for disability, for that asset protection. Business owners is another big one as well too. We do have a business overhead expense coverage, so being able to protect their business as well too is huge, right? They've worked so hard to establish that, so having something in place to ensure nothing happens to their business if something were to happen to them.
And if you had any life policies that was issued within the last 6 months, with Ameritas, you can just at least those clients don't have to go through underwriting again, right, Tanner?
Yep.
Because
Yeah.
they already have the underwriting, on file. Just go back with the illustration. You know what to rate them, because if they're preferred, if they're tobacco, what the occupation, the income. I would just go back to them with an illustration. Say, hey, based on your good health, we can offer you a disability policy, right? What's the worst
Mhm.
they could say? The worst they could say is, "No, I'm not interested," right? But at least I would show it to them. And
Is the underwriting drastically different for example, if somebody is table rated on a life, how vastly does that affect the disability?
Yeah, so there are some correlations between the two, but it's not the exact same, right? So we on this DI look a lot on financial underwriting. The difference between the two is mortality versus morbidity. So just because somebody on the life side may have gotten a table rating doesn't necessarily mean that that will be the same on the DI side. Is it likely? Yes, 100, absolutely. But it isn't like a clear cut, like the decision is going to be the same on both. If that makes sense.
Thank you.
Yep.
all right, so that's all we have for now. Tanner, thank you so much.
Yeah. Thank you guys.
We really appreciate it. Like always, if we have a case or we need help, we can reach out to you via email or give you a call. Correct?
Absolutely. 100%.
All right. Thanks, everyone, and have a productive week.
Thank you.
Thank you.
Bye.